Hi, my name's Tyler Rosenlicht. I'm the head of Midstream Energy Strategies at Cohen Steers, and I'm excited to share a market minute with you today titled Challenges and Opportunities. In the past week, we've seen a number of headlines come out, some highlighting continued challenges in midstream and some highlighting the valuation opportunity that we see in the space. On the challenging side, it continues to be very difficult to get pipelines approved, permitted, and constructed. And in the last 4 days, we've seen headlines focused on illustrating these issues. On the other side, we've seen a major value investor deploy $10 billion buying pipelines in the Northeast from a utility, which we think helps to shine a light on the value discrepancy we do continue to see here in midstream. So on pipeline regulation, three news items came out. Number one was the Atlantic Coast Pipeline cancellation. Dominion and Duke have been building this natural gas pipeline for the last few years, and they originally expected to spend $5 billion. Many cost overruns later, now the project is over $8 billion, and it remains in regulatory purgatory. And because of that, both of the developers decided to walk away. They elected to make the decision to no longer complete the project, which we think is a sign that it continues to be very challenging, and many companies will stay away from developing new pipelines here in North America. We also saw judges actually step in and affect pipeline outcomes. So the Dakota Access Pipeline, owned by Energy Transfer, saw a judge order it to be shut by the second week of August. This demonstrates that the regulation is also changing. This is a pipeline that was recently completed and placed in service, and now the viability and the ability for them to continue to operate it is called into question, which would be a paradigm shift as it pertains to pipeline regulation. And lastly, Keystone XL. Keystone XL has been around for over a decade. And though other pipelines are being fast-tracked in the Trump administration, Keystone XL is not going to be. And we think it will remain a key topic of debate at the presidential election coming up in the fall. So what does this all mean? It means, again, it's going to be continually difficult to build, permit, approve, operate, and construct pipelines here in North America. And we think that's a fact that's not going away. That being said, on the opportunity side, a lot of folks have looked at midstream and thought that it's a sector that represents attractive value, but have been concerned around how to actually approach what's the right value for the sector. And we saw on Monday a piece of news come out, which is that Warren Buffett, one of the preeminent value investors in history, is spending almost $10 billion to buy Dominion's natural gas pipeline network. We think that vote of confidence from Buffett helps to shine a light on the valuation discrepancy that we see here in midstream, and should help give investors confidence that cash flows will remain resilient across midstream assets, and demonstrate that the valuation disconnect we believe is inherent in the asset class today will be solved over time. So what does this all mean? We do think it's going to continue to be difficult to build new pipelines. That's likely going to cause returns to come down and risk factors to go up for businesses trying to construct new assets. But we also think it's going to lead to consolidation. We think it's going to lead to optimization of asset bases. And we think it's going to lead to cost cutting as the industry consolidates to work with the infrastructure already laid in the ground to manage supply, demand, and exports of energy commodities across North America. And as that plays through and more data points that help us feel confident in the valuation disconnect, we do think that the return opportunity will surface and investors can be rewarded in what has been a fairly volatile asset class for the last few years.